only. Glad you guys can make it out. I'm making some claims that are pretty outlandish, but I can back them up. Boom. End of story. There is no other crypto out there, so don't get it twisted. If you don't understand where you're parking your money, you're gonna pay the consequences for that, and that's just how the cookie crumbles. Boom. We're obliterating everybody, literally. There is nobody else that comes close to what Hex has done. Boom. Oh, it's about to get funky. Funkier than you could have ever imagined. You know, Richard Hart is a boss. Hex is literally the best thing on the planet. It's simple mathematics. What up, everybody? Happy Saturday to all, wherever you're at. This is Wells Only. I am by myself today. Just wanted to have a little impromptu, I guess a little chart stream. It's been a while since I've spoken on anything, and we got a nice little dip going on, but people are just seem to not be aware of how this works. So I'm just gonna remind you guys. So that's why I'm here. Don't plan for this to be a long one. I wanted to do a long one, but today works a whole lot better than tomorrow. So today is better, and today will be the day. So we'll make it work. And yeah, it'll be a good one as always. Just gonna be a fun, fact, math filled stream. Because people forgot, you know, people can sell. It doesn't actually matter that they sell. Because all that they're doing is setting up the system for the next rebound. So, you know, it's pretty much all it is. Because as soon as the selling ends, the price can only go one way, and that's pretty much it, right? Because you guys have to remember, it's a hallway, right? So because it's a hallway, uh, you know, the price can only go but so many directions, right? It's only up or down or sideways, literally, because this is an actual decentralized market. So you don't have any wash trading going on here. And what that means is it's not going to always be going in a specific direction all of the time, like you see in Bitcoin and Ethereum and all the other promised coins, right? Because they trade on centralized exchanges. So you're going to see a lot of directional price movement that might or might not make sense, right? But you can always tie it back to something because it's tied to capital flows, right? And we can see that every time you go to Nomics and look up whatever's going on over there, you can see the data, right? Like you just gotta look. So if you don't see it, that's on you. But I've shown it a million times before. All you gotta do is go and look at what Tether's doing versus his actual market cap, which is based on the circulating supply, right? Which means what they've actually minted. Thanks for the super chat, D'Artagnan. Appreciate it. But buy Hex instead, bro. Please. Thank you. So let's see. I'm almost done with setting up these charts here. Just going in order to make this easy on myself. But yeah. So Bitcoin's pumping. Ethereum is pumping, or at least they were. They're not pumping so much anymore. And there's a reason for that, right? And the question will be, well, what is it gonna look like when we wake up tomorrow? And the thing about it is that when tops happen, you don't see them; they just happen. So, you know, we'll see what it looks like when we wake up tomorrow. But needless to say, should be fun to see because everybody's pretty riled up, right? Everybody's pretty riled up. They know what's going on. They understand, and you know, we all have to learn the hard way that we just don't, and that's okay. That's why I'm here today. I'm here to help you guys understand what's going on because a lot of people are selling, right? The question is why. because it doesn't actually make sense. We're about to have a snapshot event where whatever you have is going to get duplicated. So that means whatever you're holding right now is going to literally become times 2, which is like, you know, doing a 1x, right? Based off what you have. So that's a double, one double, right? So why would you give one double away? Good question. I don't know. Doesn't really make sense to me. But, you know, sometimes you got to do the math, guys. And when the math doesn't add up, well, only leads to very few conclusions, none that are very conclusive, unfortunately. But it is what it is, right? So you either have a nefarious actor or some dumbass. I mean, it just doesn't leave room for much else, unfortunately. And it is what it is. You know, at the end of the day, it doesn't really matter because, like I just told you guys a second ago, you know, everybody runs out of ammo. This is not Metal Gear Solid, and there's no way to get infinite ammo here. So eventually, sellers run out of things to sell, which in this case is Hex. So what happens after they're done selling their Hex? Well, nobody ever really stops buying Hex, and that's kind of the funny thing. What you see is a preponderance of sales, meaning that there are more sell transactions than buying transactions, right? But if you look at the dollar flow, it's not really that much of a difference. Like, let's take a look at the Staker app right now because they've been doing nothing but straight selling for the past 24 hours. And that's a good gauge of how the system works, right? Because that's what we care about. We don't really care about what people are actually doing in the system, right? So far, well, this is interesting. And this would lead me to want to actually dig further. So over the past 24 hours, we got 533 sold, but 2,110 purchased. However, the dollar amount is 12.6 million sold and 11.6 million purchased. So that's basically saying we've had less sale transactions by the tune of 4x, I guess, if you want to call it that. But the dollar amount is a million less. So the question is, well, that's not a lot in dollar terms for the market to be down like it is. And the purchases are so much more. You know, what's actually going on here? Well, if you sit there and think about it, it has to be that there are just people that don't know how to sell, right? Uh, there are people that just don't know. I'm not sharing any screen, guys, and thank you for the super chat, brother. But I'm not sharing any screens. I'm just talking right now. I'm getting the charts together. And thank you for the super chat, the 50-year super chat, Desmond. Appreciate it. Um, but yeah, I'm not sharing any screen yet. I'm just talking. I'm getting the charts together still. I'm almost done. But yeah. Um, and you know what? I'll show you guys some new charts. Probably never to be seen again. Maybe I'll put them on a paywall or something. But there's some good charts and there's some stuff you guys probably haven't seen or thought of before. So I'll throw them out on here for you. Give you something new to look at instead of the same old BS, right? Let's see here. Yeah, I'm just on the last couple charts, and I'm gonna include some new charts. And yeah, we'll get it. We'll get it done. It's already 8:20. I don't want this to go too long because I got the homies Hex Machina and Hex Cuddy going on after. Crypto Kid. Yeah, Crypto Kid it is. All right. But yeah, so you know, it's very important to understand how the system works because how the system works is how it actually works. This isn't Bitcoin. This isn't the stock market. This isn't Ethereum. This is an actual cryptocurrency. So the math and the system dynamics and all of that actually matters. You know, opinions do not. Forced liquidations do not. Because here's the thing: there's no index here, right? Like there's no exchange here. I mean, so there is no forced liquidating. All the liquidations that you're seeing are actors deciding to push that sell button. So that means one thing and one thing only. that person selling is making a decision that they'll then come to regret, because that's just the way it works. I mean, I don't know how many times we've seen this. I mean, there's even YouTube videos about people just regretting it as soon as they sell it. So, this is just, again, speaking to mathematical fact, because the system doesn't care. The system is always going to operate the same. The T-share rate ain't going down. So, I don't understand what the confusion is here. But the T-share rate isn't going down. So everything else is staying the same. And it's very important that people understand that. Nah, I ain't gonna show that one. I'll do this one. You know what? Let's get this one in here. Yeah, let's add these after. But yeah, these are things that are just important to understand, because you got people out here selling, and I'm sure they're out here buying Bitcoin and Ethereum and thinking that they're making a smart trade, and they're gonna come to learn within the week that they're not. And what are you gonna do? That's just the nature of the beast. That's how we learn how to play these markets and stop having the short-sighted point of view, because that's how you get wrecked. It is what it is. And people will come and learn that the hard way. So, just sit back, enjoy the show, and yeah, it's always a good ride when nobody understands what's going on, except for a few. And that just still seems to be the case, because I still happen to be, repeating myself, because people just don't, they just don't pay attention, I guess. I honestly don't know. And it's okay. It doesn't matter. Uh, keep repeating myself as long as it takes. But you should go back and watch the earlier streams, because they're very long for a reason. If you haven't watched them, you're missing out, and you're probably going to get left behind, because there's going to be information in there that we're just not going to go over at this point, because it's been 9 months, 10 months we've been saying the same thing. So kind of gotta just do your own homework. Some things are just going to come second nature to some folks, because we've been doing this together as a community for a long time. This isn't just me coming up talking like I'm the only person that knows. A lot of people in the chat, they've watched me learn and make discoveries in real time. And this is what's going on. This is what matters, is that people see how things actually get done. And that's what lends credence to what we do over here on the Hex side, right? Because we're about facts and figures. We're not about, opinions and shit like that, because that doesn't pay the bills. If opinions paid the bills, everybody would be rich, right? So clearly that's not the case. And I'm almost done, guys. I'm just adding these new charts, and that's it. More of these charts that I'll never show again. Let's see. Eeny, meeny, miny, mo. Yeah, let's go with this one. You know what? I'll do both. Fine. All right. But yeah, understanding how the system works is extremely important. This is how you don't make mistakes. But we're about to have a snapshot, snapshot event. Whoever's selling now, I don't even know what. There's really no excuse for it, except for that they just are either scared shitless, or they really honestly don't know what they're doing, right? And that's all you can honestly say. Damn it, this isn't what I wanted to do. Fuck. It's fine. Anyway, uh, but yeah, so that's important information, right? Understanding how the system works is critical. Not letting yourself get swayed by nonsense is critical. Uh, all those things are very important, right? And people treat them kind of like irrelevant, because they think this is a market, like a stock market, and it's not. And this is why people always get wrecked, right? They end up, selling hex at the low, and buying bullshit at the high, and that's just the nature of the beast, man. Uh, Not much else we can do about that. But people will learn. I'll upload these charts later on. I'll just start sharing them now. We'll just start going over them. Uh, all right, so we're about to get into these charts. All right, all right. Grab my joint here. And we've had a pretty nice dip. So I hope you guys have been paying attention to all the things that I've been saying for months on end, and just taking advantage of the fact that you don't get these kind of opportunities all the time in Hex. And yeah, this is an opportunity because this kind of selling, we haven't had it since Big Payday. Big Payday was a singular event that is never going to happen again. And it was the only time that you were going to have a Bitcoin similar type of event, which is like halving, right? Bitcoin has these halvings every 4,000 or 210,000 blocks. And that's what reduces the pay or the reward that's paid out to the miners every time uh, there's a block minted for transactions, right? So in this case, for Hex, it's not the miners that get the reward, it's the stakers that get the reward. And the inflation is paid out daily to the staker class at a rate of 3.69%. So we go to the oscillators. Let's get rid of this. Let's just focus on this. So you have a similar trough being made here, right? We made new highs at this time, right? When we had, interestingly enough, less of a drag here when we had a down move, and we had much more of a drag here because we got a lot of sideways action this time around. So when the down action finally came, right, it was quick and furious because we already had the downward momentum working in action. It was just a matter of whether it would stay sustained, right, whether it would break the lower band of the RSI or not. And it ultimately did. And that's what we're seeing now. But what we're also seeing is that the MACD is kind of already took it down, right, to a certain area, which is relatively extreme. Okay. And that's all right. No big. Now, when you come here, look at this chart, we've broken, right, my support lines on the daily. However, we have this range down here, and we have these mini support areas here. Odds are we're not going to go lower than here, but you never know. This would be the most ultimate low, which is around 18.7 cents, right? But again, we would have to get past these little barriers of support here before this is even possible. But what I want to highlight is how we got even nastier down action this time around than we did during Big Payday. And now, why do I say that? Well, if you look at the MACD, we looked like we were going to recover, do a pullback here, but what ended up happening was we actually got slammed back down. Right now, Big Payday was pretty crazy. If you weren't here, just go back and look at those 4-hour candles during that time. This isn't the best place to look, honestly, because the data is very fragmented here. Maybe hit BTC would be better. But as you guys can see here, um, the trading was nonstop downward for at least a month, or at least until Big Payday, right? So this is Big Payday right here, and this is pretty much the end of the sideways action. So we had 36 days. All fine and well. Now, the interesting thing about this move is that it was almost the opposite of what you would expect at any point in time. So, this is what kind of leads me to believe that this is a rotational move, is what they call it on the legacy side. And by rotational, I'll show you. All right, let's see here. The market snapped as far as Hex USD around here. All right, 10th October. So it had already broken over here on the spread. So when the market finally broke, it's because it broke over here. So yeah, look at what it did versus ETH, same deal. Right, broke on the 10th, and that was that. So the question is, well, what's gonna happen now? Well, it's already kind of been much of a move, right? The oscillators are kind of already hitting extremes across the board. Um, and the sellers always run out of ammo, right? That's also important. That's probably the most important thing, because the only reason this is happening is because people are selling, right? Otherwise, why else would the market be going down? Very straightforward. But when they run out of ammo, what happens? Well, breaking 3-day support, right on 5-day support. Now, it's something unique you got to understand about Hex. It's unlike anything else. And I want you guys to know I'm not seeing anything that you're saying, because I've been looking at charts this whole time. These green lines are very tight on Hex, right? So when you get this type of move, like you got big payday, things aren't going to make sense to the system, right? Because no volatility, right? That's really all it is. No volatility. And this is why the lines will be hugging it so tight, because this is measuring the movement in the market as well, right? This is measuring the movement of the market, moving averages, how they're calculating. This is basically measuring price and how it should move, right, relative to what it's done, because that's the only real indicator we have, and that's price. Um, so that gives me a very easy view, right? And the interesting thing about Hex is that when you expect it to move like everything else, it just doesn't do that, right? It doesn't do it at all. And that's the kind of important thing you need to take away from this, if nothing else. Because I'll tell you what, it looks like it's going to be nasty, right? But the question is it really, right? Because when you're talking about a decentralized market, it's a little different. Why is it different? Well, it's because people have to want to sell. And by people, I don't mean an exchange wanting to create a scam week, right? We don't have to worry about that in Hex. That doesn't exist here, because we're not on Binance and CoinMarketCap and wherever else these things trade, right? Coinbase and shit, FTX, whatever, right? We're not on those fucking scammy exchanges. And that's all that matters, right? We're on actual decentralized exchanges where you have to want to sell what you have. So it's completely different, because this adds value to the network in reality, right? Because you have to understand, markets are a value transfer mechanism. That's it, nothing else. So while somebody's selling thinking that they're getting something, what they're doing is that they're giving up a productive economic asset, right? And there's not many of those sitting around out there waiting for you to invest in. There just isn't. So when people are selling a productive asset like this, you're just screwing yourself, right? I mean, why would you sell a McDonald's that's constantly making you cash? I don't know. I don't see McDonald's selling any McDonald's. Do you? Hell, Subway was about to go bankrupt and they just revamped everything and they're doing great. So again, why would you sell a productive economic asset? Just saying. Don't make no sense. So when you look at things like that, kind of pretty straightforward what's going on here, folks. Uh Rec sellers everywhere. And that's just the name of the game. I'm not really gonna go into this one today. We're gonna go straight to the charts. So 670 days on Dex. Hex is looking mighty fine. You might have not been around back in the day, but this is what we've done this whole time. So if you've missed the first 670 days, don't feel too bad. This isn't the end of this ride. It actually continues just like this. So just sit back, enjoy the show, and you'll be looking back at this and wondering what the hell was I thinking when their index was already at 150x, right? 150, well, hold on, 15,000x, right? Just on these 670 days, not entirely because we're missing like 2 weeks of data because the first 2 weeks were gone. So this chart is comparing Hex, Ethereum, Bitcoin since day one for each. So it's an age comparison. So we're getting an apples to apples performance comparison between Bitcoin, Ethereum, Hex, and then I've also included the T shares, which is a value proposition for Hex. Now, what are these lines? Well, this is the power trend line for Ethereum and the power trend line for the T share. Now, why the T share? Well, the T share is the miner here, right? Bitcoin has the miners. Um, Hex has the stakers, right? And that's it. So that's all, right? The T share is what people are buying. So the T share by default should outperform Hex. Very straightforward, right? That's it. So that's very simple to understand, right? Because why would you pay more for the burger than McDonald's? I don't know, but I don't think that's how it works. So you pay more for the T-share, right? More for the T-share, and that's what's going on here. You're paying more for the T-share than you do for the Hex, and that's how the system works, right? You're not going to pay for a bunch of burgers. You're going to pay for the whole store. And the T-share is a store in this instance, and that's all you really got to understand, right? That's kind of a good way to break it down. For those that are new, right? You don't buy just the burgers, you buy the whole store. Otherwise, you're not really buying a productive economic asset. You're just buying hopes and dreams, right? That aren't really going to come to fruition. And that's what you got to keep into account. So this is an important chart, right? Because look at how Hex has outperformed the top two coins, and it's only 23 months old. Or I'm sorry, 22 and a half. So what do you think is going to do in another 2 years? Food for thought. Food for thought. All right, Hex post Big Payday. I already explained what Big Payday was, right? It was that one singular event where 30% inflation got minted and all that fun stuff. Now, I got a chart that's going to highlight this, and we'll be looking at that towards the end. But let's see. This is right before Big Payday, the top on November 1st, then the bottom of November 20 or November 19th, right? And then the market went sideways from there. And this is that bottom, Big Payday, right? That was just successive lower closes until the market just went sideways a little bit. But this is the performance since then, right? 600x, easy. and we went all the way to 82, whatever, 82.41, I think that number was. Can't remember the number exactly, but it was one of those doubling numbers. Because of course this is a log-based 2 system, so every value that it touches is going to be log-based 2. It's just what it is. And I've done videos on this before. In fact, if you're new, you should watch my first ever video, how cryptos work. It's a basic introduction that pretty much any person in crypto should watch because it teaches them how cryptos actually work. At least if they're actual cryptos and not just like some nonsense, actual cryptocurrency. So yeah, this is what Hex has done versus all the Bitcoin halvings, right? This is the first Bitcoin halving in orange, the second in blue, the third Bitcoin halving in green, and then Hex post big payday in magenta there. So this is just and again, you guys got to understand this is the best, right? Bitcoin halving here, the first one, and that was pretty much it for it. So you know, this is the current one, the green one. So we are dusting Bitcoin in every phase of its existence. It's very important people understand this. Um, you know, it's just math, guys. T shares to Ethereum in terms of dollar value in pink, T shares to Bitcoin in dollar value in orange. As you guys can see, 162% of one T share is a value of in Ethereum, and T shares are 12.9% of a Bitcoin as of last night. All these values are as of last night. I didn't want to have to redo it today and then do it tomorrow, yada yada. So I figured let me get it done today because it would work out much better. And the information is going to be the same anyway because it's just important you guys understand how this system just consistently does the same thing. This is the importance in this chart. Up and to the right. Right? Up and to the right. That's it. You just need to understand that this is what the system does. You don't need anybody to tell you anything else. You just need to understand this system because this system will always ring true because you will always need more hex to earn T-shares or to obtain T-shares or to obtain shares, period, because shares get more expensive every day. It doesn't matter whether it's a T-share, doesn't matter whether it's a B share, doesn't matter whether it's an M share, K share, C share, whatever, right? The share is going to cost you. That's it. So here's a good chart. It's Hex versus the T-share market cap in dollar terms, right? Now, I want you guys to notice how the steepness in the price of Hex is not as steep, or it is way steeper than it is in the T-share price. That's important. That's important to note because that separation in velocity is what slows down the price of Hex. Because you have to remember, the T-share is a determinant for the value of Hex. Okay. Now, this is a great chart. I've updated it a little bit to include the percentage of coins staked, just so we can get a view of the APY system and how it works, right? Versus versus what you think it might do, right? And shout out to everybody in the chat. There's 256 people watching. I had no idea until I just looked up right now, and that's crazy. Shout out to everybody. So in this chart, we got the dollar cost of 10,000 hex, the dollar cost of a T-share, the APY in orange, the staked percentage of coins in blue, and the T-share rate in this magenta color. Now, what is a T-share rate? T-share rate is the dollar cost of a T-share divided by the dollar cost of hex. And the system is giving us this rate as of 3:47 a.m., I think on the 14th or the 15th of October, one of those 2 days. So we're just a hop, skip, and a jump away from 19,000 hex per T share. However, that dollar cost of that T share is going to fluctuate, as you guys can see, because that's the yellow on this chart. But guess what? The T share rate only fluctuates in one direction, and that's up. So that means no matter what this does, the t-shirt rate is always going to have to go in this direction. Straightforward. I mean, look at where the t-shirt rate is mathematically right now. You would think it would be lower than this price, but it's not. Now I'm curious to see what would happen if we went back in terms of price to these levels. I mean, we're almost there, right? But the funny thing is that the t-shirt rate, the forward t-shirt rate, which I've explained before, but I'll go over it again a little bit, is just the real time t-shirt rate, right? When you're looking at this value in real time, I'll go over it in a second. But this value is still higher than the actual systemic t-shirt rate, interestingly enough. I thought it would be close to it and we would see a t-shirt basis of a zero value, but no, it only dipped a little bit. So the system sustains that value properly. It does not mess around. So the t-shirt rate system is ingenious because it keeps things in check. And that's important because that's what you want from a system that's supposed to be sustainable, right? You want it to last as long as possible, no matter what it does. And that's important. Now let's get to the next chart, which is pretty crucial. Now this is what I was just talking about. This is 10,000, the dollar cost of 10,000 hex, the dollar cost of a t-share, dollar cost or the t-share rate, and the forward t-share rate. Now let me just show you guys what the forward t-share rate comes from, so nobody is confused. Forward t-shirt rate comes from 6290.55 divided by 32, 73.58. All right. So we take this value, multiply by 10,000 because that's the base rate for the hex t-shirt rate system. And that gives us the 19,216 that you're seeing on this chart. So now you understand what the forward t-shirt rate is. It's just a real-time calculation from when I record this value, this price. So if we wanted to find out what it was right now, we just go to GRAPHHEX.ROCKS, take a gander at what the real price is of both items. We're getting a dollar value of 5,344.9. Let's see if we can copy paste that. Just because I'm that lazy. And let's say 2827.6. That gives us, ooh, nice. A t-shirt rate of 18,902, which is 90. So we'd be plus 96. Damn, that's crazy. That is insane, actually. 28196. Let me see something. What would be the price for last night? 294561. 294561. Let's see what the t-shirt rate is for last night. Just want to get this done. Come on. T-shirt rate for last night or for tonight. Excuse-moi. Let's see. 5657.19. All right. Yeah, didn't think that was gonna stay that way. So times 10,000. See, because the system has a way of realigning itself, right? You got to understand this is a system. So, all right. So we got 19,205, which is a little lower than we are here, which is cool because that gives us a better opportunity for obtaining T-shares at a cheaper cost in real time, but not that much cheaper. And that's what the next chart would show us. Give me a second to get this thing. There we go. T-shirt basis. So given that the basis dropped 11 points, or 11 hex actually, um, it would read 209 instead of 220. But that would be the only difference in terms of one day. But now you guys know where I get that value from, right? Because I want you guys to understand this because it's important. This is how you are able to attack the system, right? And try to get a win for yourself, outside of how expensive things are, right? Because understanding the math behind the system gives you a better advantage than just understanding the prices, because the prices are kind of whatever. Being able to obtain uh, a system that produces value every day at almost zero additional cost, however, is a steal, right? Because price is what you pay, value is what you get, right? And I think Warren Buffett said that. I'm not sure, but look it up, because that quote is true as fuck. Because imagine being able to pick up a T-share at the cost that the system gives it to you, right? That's impossible to do right now because this is what the system is giving you, right? It's important to understand that the system is giving you this 19,216 or 205 number, right? That's what the system is giving you right now, not that rate. So that rate is really just for you to know what the basis of the system is. This is why I thought this little thing up, because this is what's really going on, right? Because this is a true sign of demand. That's why the system operated like this for this whole time, right? And when you look at that chart, you see that all of this was like that. This is just the value that existed in the system at the time. It just doesn't exist anymore. Now the system is much more efficient, and that's what you're seeing. So that's what's going on with the T-share rate. Now this is the value proposition chart. Now this is what I'm talking about, because this is what you're buying when you're getting a T-share, right? You're getting the payouts from the T-share, and I'm showing this in the representation of this orange line, which is showed up as a sum, right? So this line is like a long train. It's a never-ending train. I'm attaching every single day that passes onto this chart. So right now, as of yesterday, we're at 2,913 hex per single T-share. So if you've been in the system for longer than a day, right, you're on this chart, right? Like if you joined yesterday and you just got a stake that started today, meaning you got your first payout today or yesterday, you're on this chart, right? So this is important stuff to understand, right? When you're buying Hex and you're staking it, you're buying into this line because this is what price follows. It doesn't follow anything else. So eventually, guess what price is going to do? Continue to follow this because that's what it's designed to do. This is all math, right? That's the only reason Hex has gone from this price to 40 cents and 50 cents and 30 cents, because it was at 3/10 of a cent less than a year ago. So this is very straightforward. Will we wick down more? It depends. Will people sell more? You're asking the wrong person because I can't tell the future. Hmm. That's so funny. That's funny. Good for him. Not a bright guy. All right. So here's a hex payout metrics in indexed form. So the payout per t-shirt index is in yellow. The payout per t-shirt sum is indexed in this purple color, and the daily payout index is shown in this magenta color. Now, I said indexed, so this is a percentage value. So 263,000% for just being staked. If you're not staked, this is where you are fucking up. You're fucking up because you're not staked. because you fail to understand that the system is designed to pay stakers. It's not designed to pay holders. If you want to hold, that's cool, but you're going to experience price volatility. And that's just something you got to deal with no matter what. Very simple. You know, I don't really know how else to say it. Like, this is a staking coin. This is like a productive this is like running a business. Why would you have a business and not open it? That's what it is when you buy Hex and you don't stake it. You're running a business and not opening it, or you own a business and you're not running it, or opening it up for business. I mean, it makes no sense. I don't understand. 260,000% versus doing nothing and just holding the coin. I mean, you get money from holding the coin too, but it ain't 260,000%. So accumulate your shares and stop playing games. The payout per T-share index 519, meaning it's done a 5x since inception. And the thing you have to understand about this chart is if you look at this line, the downside volatility is essentially zero, and the upside volatility is crazy. Meaning the risk is always to the upside, never to the downside. That's important to understand, right? Because you're always going to get paid out every single day. The system's always going to pay you out because, again, this is a productive economic asset. This is nothing else. Daily payout index, again, 17,093. And this is, again, the system increasing in payout 170x. And if you look at the line again, downside is flat, upside is volatile. So your exposure is always positive. All right. This is the everybody gets paid chart. So if you're staked, you're on this chart because you will be included in this everybody. If you're not staked, I'm sorry, but it's a lie to you. You're not actually in this chart. So, be mad at yourself. So hex price is in this purple color here, or pink, whatever. Payout per T-share is in yellow. Payout per T-share, or this is the all-time average in yellow. The payout per T-share average for 28 days is in orange. Payout per T-share average for 55 days is in magenta. And here we got 5.898 for the 55 days, 5.75, right, which is what we've been seeing for the past 28 days. As you guys have been paying attention, you probably caught that. The all-time average is creeping up still at 4.272. And here we got the payout metrics from yesterday. Today's got to be higher, right? Because we had a emergency on staker. Let's see what we got. Oh, nice. 6.234. It's been a while since we got one that big. So shout out to him for hooking us up. Good looks, homie. Much appreciated. Yeah, we appreciate emergency on stakers around here. We don't really care that they sell. Good for them. 11.051 million trillion shares. Let's see what we got today. I just like to know that number. Yeah, it's actually a little lower. So that means people exit the system, which is cool. 68 million, 68.9 million on the payout. It's cool. APY jumped up to 40% too, which is cool. All right, let's keep pumping. So correlation, as you guys know, I already did a stream on this. This is zero. If you haven't watched it, go back and watch it. I did it like last week. It's a good stream. It'll tell you what these charts mean, and those charts will tell you that these charts are all that matters. If you understand these two charts, which is just versus Ethereum, the all-time zero correlation versus Ethereum, and the all-time zero correlations versus Bitcoin, you'll understand that nothing else really matters. So, yeah. That's pretty much all that is. Because professional institutions that manage money, they do this type of statistical analysis. And when they find something like this, it's not a question. The only question is how much can they put into that asset and get away with? Literally, because they understand that this is going to outperform everything else that they own because nothing else is uncorrelated. Everything else is correlated. Bitcoin is correlated to Ethereum. Ethereum is correlated to Bitcoin. Bitcoin is correlated to the SPX. SPX is correlated to the NASDAQ. The NASDAQ is correlated to Ethereum. Ethereum is correlated to the SPX. SPX is correlated to Bitcoin. Bitcoin is correlated to ND. Like, it's a whole shit show. So, doesn't matter. Oh, this guy. Yo, then just get out, bro. Nobody cares. Like, just get out. Seriously, if you don't like the volatility, just get out and good luck elsewhere. Like, bye bye. Nobody cares, man. Should have been staked, bro. So, rolling correlations: T shares versus Hex. So, if you guys look at this value here, this is the value for the 55-day correlation, and that value is still at 1. And what that means is, once again, the T share rate never goes down. The dollar cost of a T share, while it does fluctuate, it still will always go up over time because the system will always require more T shares or more Hex per T share. It doesn't actually matter. So it's very simple. Uh, I mean, it's kind of funny. This is such a menial pullback. We're only at 27 cents, and people are acting like the world is ending. It's the funniest thing. Hilarious. Hilarious. But what are you going to do? Can't help the funny guys. But the 55-day correlation is still at 1. So you guys know what this is going to look like next week. It's okay. It's all right. People will learn. And this is the, I guess, dollar terms chart. I don't really got a name for this one. But it's everything in dollar terms. Hex in orange, payout per T-share in magenta, adjusted Hex value, which is just the sum of Hex and payout per T-share in some form, and then the exponential line in green. Now, as you guys notice, every time we go below this line, Hex just rips back. So it's just a question of when, right? It's going to ultimately come back because that's just what it has to do. Because the system is just consistently building value, right? That's what this chart is saying. Well, that one's saying that, this one's saying that, that one's saying that, right? It's consistently building value. Like, this is a no-brainer. Why would you not buy an economic productive asset? I don't understand. Why would you sell it? I don't understand even more. So, as of yesterday, the payout per T-share was $1.88, giving you a total adjusted Hex value at 220. I mean, today is going to be higher because it's going to be based on, even though the price is lower, you got more Hex per T-share. So that's basically going to be like 29 cents times 6, which is $1.80 and plus a quarter. So I don't know, maybe $2 total. So probably 227, 230 total. But you got a higher value printed by the system today, and the system's going to react to that. What people don't realize is that for every single day that passes, that Hex is paying you out, you're buying that dip. So every time you see a low or a down move like this, you're buying this, right? With all those T-shares you got, you're buying that. So when the market comes back and turns around, all that's going to happen is that your P&L is only going to be bigger because now you got all this additional Hex. So this is why you stake. You automatically buy the dip. You don't even got to think about it. I mean, there's a reason people say stake long and stake long. And stake big. You know, stake everything you can stake because that's the winning strategy. Because the reality is at the point of this game, the name of this game is to compound your money. It's not about anything else. So if you're not trying to compound your money and you're just trying to hold a liquid position, not understanding that you're playing yourself, you better go back and learn how to do some addition, some multiplication, some subtraction, some division, because you're missing the basic tenets of what this investing game is all about. And it's all about singles, doubles, triples. Home runs will come here and there, but you got to do the rest. You're never going to make money if you're not doing the rest. And staking is doing the rest, and you're not having to think about it. Pro tip. Price to earnings is how quickly you're going to make your money back in a year. So you take this value, 17.44%, which is just shown in decimal form here, and you multiply by the number of days in a year, right? You multiply by 365, and that gives you 63 days. So that's basically one will be doubling again versus what the system usually does, right? Which is the same thing. So that's why that's the base doubling rate. Total holders versus the price of Hex, and as you guys can see, we're a little bit below that. So the odds of price actually staying below there are very, very low. current stakers, you guys see we're floating right above that, so price probably isn't going to stay just down here for that long. It just doesn't make statistical sense. And here are those charts I don't really show a lot, and we'll wrap it up right here. Total value locked per staker is 407,000 in dollar terms. But of course, it's going to fluctuate, right, with the price of Hex and all of that. And I forgot to get rid of those little price markers and adjust them. So sorry about that, guys, but I was just throwing them there. Thanks for that super chat, and appreciate that, man. Appreciate that, brother. Again, it's very important to understand that this is about the system, right? If the system does a 50% pullback after running up from 12 cents to 50, or from 24 to 50, you know, not much that anybody can really tell you. I mean, this is a quarter of 100%. This is 25%. Like, if you're tripping about that in crypto, then you don't deserve all the X's that come with this game. You just don't. You got to understand that. You know, this is very simple. Very simple, you know. This is minted inflation to the price of Hex, and as you guys can see, it hasn't really been that much inflation being minted lately. So whoever's selling, right, they're giving up what they got. Like, that's just it. So, and I don't know if you guys heard, but there's somebody already buying in at a higher price. So they're fucking themselves. No two ways about it, right? And here we have the percentage of stakers versus holders, and as of right now, we're at 26%. So kind of up there, current staker versus current holder. All right, so, you know, this is going to carry the price. Like, whoever is selling, they're not going to be able to do much after they sell, but have to buy higher. That's just it. Like, people got to understand that. This is circulating supply versus the holder count. All right, the current holder count, as you guys can see, this is trending down, meaning that there's less to go around. And this is while people are still selling. So again, I don't really know what to tell you. You know, you guys got to pay attention to what the math is saying. And thanks for that super chat, Bradley Brown. Appreciate that, man. Appreciate that. But this is just the kind of things I'm talking about. Like, you guys got to look at the math. Everything else is irrelevant. Payout per staker. Payout in Hex terms per staker. It only goes down. Less Hex to go around. Think about it. Let the people sell. They're just going to have to buy higher. Staked Hex per staker. It only goes down because there only is less Hex to go around. Pay attention to the math, guys. That's all I got. You guys be easy. Peace. Like, this is just math, man. Y'all crazy. I'm out. The information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only and his guests are not responsible for any losses you may accrue from having weekends. Where the haters at? Y'all bitches still ain't showed up. And now, right, we got Hex. Flawless uptime. People thought this was a joke. Now they're mad at the chart. It's lullaby music, really, right? It's hard to believe that something like this exists. I get it, but you just gotta come to terms with reality. It just exists. Nothing we can do about it. Buy a steak and chill, baby. Shout out to Marketable Thoughts. You can't get this kind of shit for free anywhere else. And it's very important to understand that. And we're handing it out. People thought this was a joke. Now they're mad at the chart. So much luck, once again, because the facts don't give a fuck. Peace.